that U.S. China relations are going to remain in the headlines for the remainder of the year. It's not just the Trump administration. You can look at the Congress, and there are reparation bills. You can see both on the Republican and Democratic side that there's a lot of talk about just the tensions that are there, and you can see this in public opinion polls in the U.S. as well. That there's a negative impression of China from a lot of the U.S. public. So this is not an issue that's going to go away. But we have seen in recent days more export restrictions. You also have reparation bills, although I don't think they will go through the Congress, that are under discussion and getting into the headlines right now as well. So I think this is an issue that had already been on the radar well before the pandemic, but is going to remain on the radar as we head into the election cycle in the U.S.
All right. Joyce, what can you tell us about the state of the banks in the United States? Do you think that given their financial performance, given the underlying economic conditions, given the wave of bankruptcies, the defaults are coming, and that is what the price action of some of these banks is reflecting?
I think that the banks are in a fundamentally different place than they were during the global financial crisis. They're much better capitalized. You've also had in the U.S. high-grade market, you've had record issuance. I mean, this year we think that you are going to actually have issuance in the order of $1.6 trillion. And so for the larger, the banks and the corporations, this isn't the problem. Where I do think you're going to see more concern going forward is looking at the non-bank sector. I think that will become much more of the focus rather than the banks right now. Now, there could be more concerns if you actually did see a negative Fed policy rate for the deposit rate as a matter of policy, but I do think that is highly unlikely at this stage in the game, even though you could see negative yields. I don't think that will be a deliberate policy, which would hurt the banks. But right now, I don't think the big banks are the place to really focus. I mean, the fact is this rally was very rapid. It was very rapid on the way down, and it's been very rapid on the way up. So some consolidation here needs to be expected.
Can you give us an idea, Joyce, of how much consolidation, though? I mean, would you say we could go all the way back to March lows?
I don't see us going back to March lows because I really do think the Fed facilities have put a floor on this. At March, there were fears about the U.S. funding market, which is not a concern right now. There were concerns about whether high-grade companies could raise capital, which is not a concern. We're looking at record issuance right now. And there was also concerns about what would happen, at the household level. And what we're seeing is that these stimulus packages are going to continue to be debated, and we do think that one will be forthcoming, even if it doesn't come out as quickly as some of the first four did.